So I'm sitting at Clearstone's office, which is in Santa Monica, and some would say it's one of the top venture capitalists out there, really, and there's a lot. And William Quigley, who's one of the partners, is probably one of the more articulate VCs that I know. I just want to ask him a simple question. William, here he is.
Ken?
What gets you excited right now in this market?
What gets me excited? More than anything, it's having waited 9 years for the IPO market to return. This year, 2010, particularly in the first and second quarter, I think what we're going to see are some of the biggest high-profile IPOs of, let's say, the last decade.
Why this year?
A lot of reasons, but the main reason is you have 100, 150 venture capital-backed companies that have had an opportunity to grow into profitable $100 million revenue plus opportunities. Some of them $500 million plus revenue opportunities. Those would have gone public at the end of 07 or 08. Obviously, we had the financial meltdown, so they couldn't. But in the meantime, they've only gotten bigger. They've gotten better management teams. Their businesses have become stronger. So when these companies go out and when the capital markets see the types of investment opportunities now available in recent IPOs, I think that is going to in turn drag along a lot of other companies that might have been considered a little early, but still have good growth prospects. I call it the unleashing the animal spirits. IPOs, like no other event in the capital markets, get people excited about the future. And IPOs are all about what's going to happen in the future, because these are small companies, hopefully growing into big ones.
So a lot of the VC firms finally have an out, because that's really important. It's not just M&A, it's
exactly,
IPO.
because what a lot of people need to realize is venture capital firms invest in companies, but they need to get that money back at some point, because they take money from people and they promise them in 5 or 10 years they'll return that capital. Well, they're getting pretty long in tooth, some of these funds that had those investments. So yeah, the VCs are going to get an opportunity to return money back to pension plans and individuals who invested in them. And then, of course, let's not forget the management teams of these companies. Now they're going to get an opportunity to cash in on all the hard work they've done. And the benefit of this, it's this virtuous cycle, is those very entrepreneurs now become venture capitalists or angel investors themselves. They start to find other opportunities with this newfound wealth. And so you can look upon that as a 2011 and 2012 sort of dividend that comes to the early stage environment by these companies going out and going public.
William Quigley, thanks a lot.